There we go. We're live, Angus. All right. All right, sir. If you're ready to roll, Angus, I am ready to roll.
I am as ready as I will always be.
All right, here we go. Hey, everybody. Mike Lawson here with CU Broadcast. Welcome to our show. And on today's program is Mr. Angus Ross from Finastra. Angus, how are you, sir?
I am very well, Mike. Yourself?
I'm doing great, doing great. Better now that you're here and we get to talk about this study that you guys just conducted. It's the Banking as a Service Outlook 2022 study. And before we get into the Banking as a Service Outlook, and it also kind of relates to embedded finance. So can you kind of set the table here real quickly here and with an overview on embedded finance or banking as a service and what it means for credit unions out there?
Yeah, we'll do. Look, before I set the table, I have to say I'm enjoying the pace of your speech. As an Australian, I get accused of being a fast talker all the time. And I think I'm going to have to speed it up just for this interview. So,
you'll be fine. I'm kind of go back to the old FedEx guy way back in the 80s or 90s when he was talking 100 miles an hour, those commercials back in the day. So, yeah.
Well, hopefully the audience can keep up with us going 1,000 miles an hour. So, love it.
That's up to them.
All right. Let me try to keep it simple. Right.
Sure.
We see a spectrum of open banking, banking as a service, and embedded finance, right? Open banking sort of been around since 2018, and banking as a service and embedded finance. And everyone sort of uses them interchangeably, right? And the easiest way we explain it, because a lot of our customers aren't bankers, right? A lot of our customers are retail brands or e-commerce shops or whatever else it would be. So we talk about open banking as sort of the mandate for banks to make their products and services accessible, right? Open, effectively. So if fintechs want to pick one part of an account and then add it to some other account that's held somewhere else, they could do that. But it just made them open.
Yeah.
And banking as a service came along and supercharged with data and technology advancements that said, now you can take what's open and connect it, right? And then embedded finance, which is the evolution, says, just because you've connected it doesn't mean it's embedded to a point that a customer actually wants to consume it.
Mm-hmm.
So I use the example, you can manufacture a product and you can stick it in a warehouse, but if no customers are coming to that warehouse, it's useless.
Right.
And so the open banking as a service and embedded finance continuum really takes the product that is manufactured by a licensed bank, puts it through a platform that's consumable and consumed by fintechs, retail brands, even other banks who want to resell that product.
Right.
And so that's we talk about the move from conscious banking, i.e. a customer knowing they want to bank via a bank, to contextual and unconscious banking, which means a customer doing something they'd probably prefer to do, right, where it's relevant and valuable to them, goes, oh, this is great. Here's a financial services capability that's just embedded in that context.
Mm-hmm.
And it's easy and frictionless for me to actually accept that or to use that.
Hopefully that's the magic word, frictionless.
Yes.
Which we're all attaining to. So, all right, thank you for setting the foundation there. So let's get to the study here. Can you give us a quick overview of the study, and then we can dive into a couple of findings that you guys discovered here?
Yeah, let me give you sort of why we did the study in the first place.
Sure.
So again, 8,500 customers of ours are primarily FIs, like banks or financial institutions,
mm-hmm.
and increasingly customers of the embedded, so the demand side. They were all increasingly aware of what banking as a service and embedded finance was, but they're asking this question, well, who's doing what's working, what's not, who's making money out of it, what's the value pools, all the questions that they were asking for proof points. And so what we did is we commissioned the study to really provide some of the proof points. So provide a taxonomy on what we see as banking as a service. What are the specific use cases that are actually occurring in the market and what the growth trajectory of those would be? What the value pools around those use cases are. So, for example, if you pick point of sale financing, is the value pool for a home improvement lending offer more valuable than a $50 buy now, pay later capability? So where's the value, arguably by vertical? And then who are some of the early winners and losers, given that it's sort of only been around for sort of a couple of years. So that was the setup for the study. And then obviously the Outlook 2022 tries to encapsulate all of those based on those themes.
And who did you talk to, and how many folks did you guys talk to in this study?
Yeah, so we wanted to get a decent proportion of respondents. So we surveyed 1,600 people, and we had deep interviews with 50 executives. And those 50 executives, and the 1,600 for that matter, covered the three archetypes of, let's call it the personas. So we talk about the banks themselves, so the providers. We talk about the organizations or the brands that own the embedding, whether they're ERP companies, whether they're platform companies, whether they're retail brands or merchant aggregators. So we call them embedders or the distributors. And then the middle orchestrators, whether it be the fintechs or even people like Finastra, who join supply and demand. So join the providers and the embedders. And so we made sure that we had an equal representation of those three cohorts across the 1,650.
Okay, gotcha. All right, so let's get to a few of the findings here, because I'm finding these I have them in front of me here, but they're fascinating what you guys discovered here. So if you want to start from your end, which ones really stood out for you and why?
Yeah, so we had them again across the spectrum, but by and large, first and foremost, the provider side, so the bank side, where more than 80% of those expected the BAS market to grow, which wasn't a surprise. What was a surprise is 30% of those said it would grow up more than 50% year on year, right? And so just on whether it be a provider, an embedder, or a distributor, they all saw the growth of BAS. So it's people had, say, 12 months ago described it as nascent. It's definitely not nascent anymore. But what we found is the vast majority were actually seeing it in growth stage and 50+% growth stage.
Okay.
I can sort of rattle off a few, and then do you want to come back and ask some questions on the three that I give you?
Sure. Well, there's one here that 60% of financial institution providers want a proven use case and market before they adopt a banking as a service model. So that one really kind of stood out for me. So
yeah, it stood out for me. A couple stood out for me. One, what percentage of them actually saw themselves as quite mature, right? And what stage they were in. And the other one was around the proven use case, because what we're actually seeing in the market is a slight nuance to that. And so when they refer to proven use case, you've got borders around point of sale financing, for example. Like point of sale financing, if I'm a merchant aggregator like Green Sky or Lone Star or others like that, they sell different types of lending product to their end merchants. It could be a simplex buy now, pay later product. It could be a high value, more complex one that has a more unsecured and underwritten lending behind that. And the providers that they bring in, the lenders that they bring in to actually service that are very different depending on the merchant aggregator themselves.
Okay.
So I want to see a proven use case in the market works for let's call it the low-hanging fruit, like retail buy now, pay later, because it exists. Yeah. But on the SMB lending side, which we're seeing huge growth in, and the study actually backed that up, it's a more complex space. So the use cases are defined, and we're obviously having conversations with customers and market to enable that. But the actual solutioning and the assets and the technology that underpins it, at the moment, people aren't just plugging into a single fully fledged ready-made ecosystem. So that's I think the nuance which we found interesting.
Okay. The other one was, the SME, the lending sector will heat up, expected revenue growth 30% by 2024. Can you address that one real quick?
Yeah, that was interesting, because the data point I've been using before our study came out was Accenture's, actually, who only recently said 25% of all SMB banking, not just lending, but banking. So a quarter of all small to medium business banking will be done in contextual channels by 2025.
Oh,
so in 3 years, they're saying a quarter of all small business banking will be done in channels that banks don't own. Ooh. So that was the data point I've been using for 3 months if it is that old. And then our study actually backed it up. It was slightly more conservative, right, in terms of the revenue projections, but still on point that, and it's not surprising. Like, it's a complex product. If you're a small business, there's huge demand for just upfront cash flow, supplier financing, capital financing. It's why the likes of Square Capital provides funding to its point of sale merchants. It's no different than Stripe Capital has recently announced the relationship with Spotify, right? Same thing, providing lending through to Spotify customers because they've already got a payment rail there.
I got it. Okay, makes sense.
Intuit Capital, so they're all capitals, right? The lending arms of these organizations. Intuit, the same, right? If you're on the accounting package, you can get a lending offer as well. So they're captive audiences that in context find these extremely valuable. Whereas if I'm a small business owner, it's normally very friction-full for me to deal with that. So the friction is the main driver for this. So as long as people enable it, that's why we definitely agree with the views that the market will heat up and there'll be a huge shift from traditional channels unless they become as equally exemplary in the experience. But they won't be as contextual.
Gosh, this continuation of these other companies, these other entities, fintechs, if you will, just nipping at the traditional banking's heels on their services. And this is just another example of how they're doing this. Gosh, it's just amazing what's happening out there. What response have you guys received from these findings? Because I think a lot of these are incredibly surprising. So what feedback or response have you received so far?
The first response, and look, it's early days. We launched it days ago. We're not even a week into this.
Brand new. I apologize.
I know. Well, you should feel privileged, right? That it was embargoed until I think it was Monday. What are we at? Thursday now.
Oh, so 3 days in. Okay.
Indeed. The first one is validation of what they were thinking, but they didn't have the data points or proof points. So whether it's, again, embedders or providers, so the banks or the brands, we're going, great, now we actually have a data point to support our business cases, right? And so we agree with the imperative. The use cases, the taxonomy that we detail in the report between retail, small business and corporate use cases has helped people frame how they should think about the opportunities. Banks, for example, again, I keep saying they're most of our customers, we're struggling with where do we start with BAS? Because we're a bank and we have a retail, a business and a corporate arm. Where do we start?
Yeah.
And so our taxonomy at least says, here's I think there's 9 or 10 different use cases. I should know this, right? But here's the 9 archetypal use cases. Here's the growth we see in each of those use cases based on the survey. And here's with them, obviously, when we work with them, here's where we see white space for you that you should really lean in. So one, it gives them a framing and a narrowing framework, right, to identify the use cases. And then just based on where the friction is and what the respondents have said, it gives them validation for their business cases.
Yeah. I think the more opportune question I should have asked you is what did you guys learn from the findings, or what lessons did you learn from the findings, rather than, hey, what's the response? So
I hear what I want to hear, so apologies.
No worries. You're good. Hey, what's the market value here? Because I'm really curious here, because you talked about maturity earlier. And so, where are we with this? And then what's the market value here?
As much, I keep saying the same number, and I'm going to caviate it before I say it, right?
Okay.
Because it still is such a huge number, but there's multiple sources that validate it. So let me take you a step back. About 18 months ago, the widely used number for BAS globally was 3.6 trillion, right? And I think Bain, with some help from Simon Torrance and others, did the analysis to derive the 3.6 trillion, right? And all that was if you look at the forecast for the payments, the lending, and the insurance banking business, what percentage of that forecast would shift to contextual channels? And then ultimately, through assumption, it came at 3.6, which we always thought was quite conservative. And then more recent updates to that sort of two adds to that. So firstly, BAS enables what we call wholesale marketplaces. So if a bank wants to wholesale its capabilities, such as cash management, receivables management, transaction banking, cross-border payments, FX, treasury, that capability, wholesale that to another bank who has a group of corporate customers, it can. That whole market around wholesale banking as a service hadn't been quantified. And a collective, and it's not just Finastra, again, Simon Torrance and others have helped on this, took that to about 5 trillion. This is all by 2030, so in the next 8 years. And then lastly, there's a whole added set of product, services, capability, adoption, and market take-up, such as, you could be online, just searching for a holiday, and all of a sudden there's a funding offer, an insurance offer to lock you in right now for a discount. Now, that wouldn't have been captured in market size anywhere, because people, by and large, sort of took travel insurance out as an exception, and then funding a holiday would have sort of been on card if they were going to do it at all, right?
Yeah.
And most people wouldn't have done a spontaneous purchase. So there's a whole net new market, whether it be retail, corporate, or business, that we see takes the market size to 7 trillion. So the number you'll hear from us,
oh my gosh, Angus,
it's I keep coming back to, and I'm an ex-banker, right? I've spent half my career inside banks. I keep coming back to the SMB lending, small business banking, 25% of that business. If you're a bank that makes half of your economic profit off the small business sector, right? That means half of your economic profit is at risk, because companies like, I probably shouldn't say them, but Stripe or Square or Intuit or anyone for that matter, who embeds that payment or lending product in context, they can take that money from you.
Yep.
Right?
Yep. So scary. Oh my gosh. And that kind of goes, and our audience are credit unions. So that kind of goes toward credit unions as well, right? Because if banks are going to be affected, then credit unions are going to be affected as well, right?
Well, I don't say more so, right? I think credit unions, by and large, have been very successful at presenting their unique value proposition, right? There's one lending aggregator that we're working with at the moment who most of the lenders that underpins them are credit unions. And it's a very compelling relationship that they have. And obviously, part of what we're exploring is how do we bring more of our base to merchant aggregators like that? Because credit unions, their cost of capital and their pricing is quite different than the sort of the regionals, the super regionals, and the universals. So my view, and maybe you'll get to this, is credit unions have a great opportunity to take their, if not more, market share in this space by understanding where their customers want to bank in future channels and get connected to the intermediaries that will connect them there.
Yeah, they're a nimble bunch, that's for sure. They can move on a dime, and they can certainly address this proactively, if you will. And that seems to be the name of the game these days. You got to be very, very proactive. I want to give Finastra a plug here before I let you go. What is Finastra's role in all of this? Where do you guys sit in the mix in all of this?
Yeah, look, we describe ourselves as the orchestrator of open finance, right? That's what we truly want to be. We don't want to own any part of it. We want to connect many providers, many credit unions, to the many fintechs or brands that want to consume those products. So rather than, if I'm a credit union in one specific region, having to go and knock on 100 doors to tap into these indirect channels, come and knock on our door, right? And we will introduce them through our distribution network to those fintechs. Our open platform, fintechs are developing new apps daily, weekly on our marketplace. That is a point of distribution. We've got hundreds of other thousands of other banks that want to tap into product. We've got increasing number of brands, and you'll see announcements that we make over the coming weeks and months with those brands. So we see ourselves as a connectivity tissue, right? Connecting the providers with the brands and the embedders.
Oh, cool. It sounds like you have your own your own ecosystem of apps. It sounds like almost kind of like an app store, so to speak, right?
Yep. Yeah, pretty much. Think of ourselves as we've got hundreds of APIs or services, the connections, right?
Yeah.
we tap into, our strength is actually 8,500 banks globally, right? We're the cause of payments or lending or treasury or universal banking. If you want to take a loan out, right, and you're a retail brand and you want to facilitate that loan, connecting into a bank's core decisioning and originations engine is critical. Our platform is that connection.
I gotcha. Okay. The conduit, if you will. So
Indeed.
good stuff. Hey, before I let you go here, where can folks find out more findings on this study? Because I think we just scratched the surface here, obviously. So where can folks go? Obviously, Finastra's website. Is there a particular place we can go there?
Landing page, finastra.com. Or if you type banking as a service, Finastra, you'll find it.
Okay, good deal. We will put that link in the show notes so people can get right to it and give you guys a call if they have any questions or need anything. And Angus, anything else to add? Any final thoughts on this topic here? Because again, it sounds like with a 7 trillion, we're on the launch pad for something big here.
I love a spontaneous question. Look, my final thoughts are, and again, as an ex-banker, right, there's so many competing interests, and this is just another one of them, right? And so if I'm a banker, more so than an embedder, what's the call to action, right? 8,500 banks cannot connect into one brand channel, right? The first movers that get connected and have priority placement of their product in that channel will be the winners, right? The first 5 or 10 that are within a certain platform or a certain embedded channel. Your number 100 or number 500 that's knocking on that brand door and saying we want to provide a lending product in that context, it'll be you won't, unless you discount your product unnecessarily, it would be very hard to contest it. So I'd say the early movers will be very successful. The late adopters or late followers will struggle in this space.
Yeah. Isn't that usually the case though? Those early adopters, they get in there and they win. So, so get in there while the getting's good for sure. All right, Angus. Well, I'm going to let you get back to work. I know you got a lot on your plate, but we appreciate your time today and just fascinating stuff here. And it sounds like we're just on the beginnings here. So exciting actually for a lot of folks out there. So good stuff. Appreciate the time, Angus. Well done.
Thanks, Mike. Good to be here.
And that is it, sir. And if I can find my cursor, there we go.